A significant sum of money, amounting to hundreds of millions of US dollars, is at risk. A nefarious situation is unfolding clandestinely. I am incredulous that it is indeed occurring. We just have a mere 24 hours remaining till an event of potentially devastating proportions. This video is of utmost importance, therefore we should not delay any further and proceed directly to the main topic without any delay. Welcome to Dr. Crypto, your daily serving of Shiba. This is the spot for you if you're curious about anything related to Shiba. If you want to keep informed about all the latest news forecasts and stay ahead of the curve in the crypto industry, subscribe. To get more SHIB news, be sure to click the like button. Within the unpredictable realm of cryptocurrencies, investors have seen a tumultuous period in recent weeks. Just as it appeared that the market was making progress towards recovery, another sudden decline disrupted the situation, causing confusion and incredulity among many. The recent sharp decline in prices yesterday caused significant concern and disruption within the cryptocurrency community. However, what has been the main cause behind this unpredictable journey? 3 months ago, the introduction of the first ever cryptocurrency exchange-traded fund, ETF, specifically the Bitcoin ETF, significantly increased investing opportunities in the cryptocurrency market. The significant inflow of cash, totaling hundreds of millions of dollars on a daily basis, triggered a state of excitement, driving prices to levels never seen before. Bitcoin experienced an extraordinary surge, surpassing the $70,000 threshold and continuing to increase. Furthermore, this holds significant importance. The significance of Bitcoin's role as a major participant in the ongoing cryptocurrency market surge cannot be exaggerated. Each action it takes creates a ripple effect that permeates the entire environment, exerting an impact on the path of other assets, particularly Shiba Inu. We have observed directly the strong correlation between Shiba Inu and Bitcoin, as their fortunes rise and fall in sync with the leading cryptocurrency. The importance of Bitcoin's role is undeniable, particularly when taking into account the recent rapid increase in value of Shiba Inu, which has surpassed 200% in just 1 week. This illustrates the interdependence of the cryptocurrency market and the significant influence of Bitcoin's advancements on other cryptocurrencies. However, what events occurred within the past 24 hours that caused a significant decline in cryptocurrency values once again? That is an excellent inquiry. Amidst a period of apparent stability in the cryptocurrency market, investors were suddenly overcome with a sense of comfort. Following a series of persistent crashes, a glimmer of hope appeared as indications of improvement became visible in the distance. Nevertheless, this hope was fleeting. Although there were initially positive signs, the market quickly descended into turmoil. Yesterday witnessed the most substantial withdrawal from the Bitcoin ETF in a single day, amounting to an astonishing $154 million. The substantial outflow of funds from ETFs initiated a chain reaction, leading to a substantial decline in the value of Bitcoin. The consequences reverberated throughout the whole cryptocurrency market as prices sharply declined once more. It is worth mentioning that this is not the first occurrence of such a situation. On March 1st, a comparable incident took place, albeit it was of a lesser magnitude. Nevertheless, the outflow of funds that occurred yesterday greatly exceeded past instances, hence intensifying the effect on Bitcoin's price direction. However, what is the duration of the crypto market's ongoing decline? Why did the influx of investments into Bitcoin ETFs abruptly cease? Does the narrative conclude here, or is there further development to be revealed? The tweet, filled with factual information, depicted a bleak portrayal of past declines and possible market declines. Historically, Bitcoin has experienced retracements 14 to 28 days prior to the halving event. In 2020, this retracement had a depth of 20% and commenced 14 days before to the halve event. This retracement lasted for a short duration of a few days, but it was followed by a reaccumulation period that lasted over 150 days until Bitcoin saw a breakout and entered into its parabolic uptrend. In 2016, the retracement before the halving was a significant 40% decline and started 28 days prior to the halving event. The retracement lasted a total of 8 weeks until Bitcoin saw a breakout and entered a parabolic rise. This foreboding prediction indicates that Bitcoin may be on the verge of a substantial decline, mirroring past trends recorded prior to previous halving occurrences. The raw data presents a somber depiction of possible reversals and extended durations of market instability. Now you may be contemplating, all right, that is logical. Anticipating a further decline in the crypto market, individuals are divesting their crypto assets with the intention of repurchasing them at a later time for a more economical price. However, the situation is not as straightforward as it may seem. No, not in the slightest. Contrary to the rational anticipation that investors would sell their cryptocurrency assets to take advantage of expected price declines and subsequently repurchase them at reduced prices, recent market trends display a puzzling contradiction. Contrary to an increase in assets being deposited into exchanges, we are currently experiencing a rise in assets being withdrawn. This perplexing phenomenon prompts inquiries on the traditional belief of selling at a high price and purchasing at a low price. It is not entirely coherent. If individuals were genuinely seeking to sell their cryptocurrency assets in expectation of declining values, we would anticipate a significant increase in the amount of cryptocurrency being deposited into exchanges as they attempt to carry out their sell orders. Contrary to expectations, there has been a notable decrease in the amount of assets being exchanged, suggesting a hesitancy to sell or give up ownership. Similar puzzling conduct is also observed in certain Shiba Inu whales. Illustrated by the recent occurrence, an anonymous entity withdrew more than 500 billion Shiba Inu tokens from Coinbase. What is the current situation? The information does not cohere logically. The inconsistent market behavior may be attributed to an informative tweet that illuminates an intriguing phenomena. Based on the tweet, there is a trend of Bitcoin moving from individuals who own 0 to 10 Bitcoin to those who now possess 10 to 100 Bitcoin. This discovery indicates a deliberate change in strategy among certain whales who are actively acquiring Bitcoin assets, even in the midst of the current market decline. This method challenges traditional beliefs. Instead of liquidating their assets in expectation of declining prices, certain large investors are reinforcing their investments by continuously augmenting their holdings. Instead of giving in to fear and selling in a hurry, they are taking a proactive approach by increasing their holdings even during a turbulent market. The reasoning for this unorthodox approach becomes more evident upon closer scrutiny. Through the accumulation of cryptocurrency assets during periods of low prices, these large investors are carefully positioning themselves for potential future profits. They acknowledge the historical pattern that occurs after Bitcoin halving occurrences, in which cryptocurrency prices have typically surged. Essentially, these whales are strategically preparing for a possible surge in market activity after the halving event. Instead of being discouraged by temporary swings, they are using the cyclical pattern of the cryptocurrency market to their benefit. They are getting ready for the unavoidable upward movement that typically occurs after times of consolidation and regression. The deliberate acquisition of assets highlights the advanced knowledge and forward-thinking nature of institutional participants in the cryptocurrency industry. Although retail investors may be influenced by market emotion and short-term volatility, certain large investors, known as whales, operate with a more profound comprehension of market dynamics, strategically positioning themselves for long-term success. This serves as a reminder that while market volatility may cause fear among retail investors, institutional players frequently possess a more discerning view and strategy for navigating volatile conditions. However, let us redirect our attention to the Shiba Inu breed. This question has been occupying the thoughts of numerous investors, particularly in light of the recent volatility in the market. The solution may be unexpectedly surprising. CoinCodex, a prominent organization specializing in on-chain measurements and price prediction, has provided a highly positive forecast for Shiba Inu. Based on their data, Shiba Inu has the potential to experience a remarkable increase of up to 220. This prognosis indicates that Shiba Inu has the capacity to not only exceed its previous highest point, but also achieve new levels, potentially surpassing the 4-0-9 threshold. For investors who have persevered through difficult times and stayed unwavering in their support of Shiba Inu, This forecast could be a reason for joyous celebration. The long-awaited possibility of surpassing Shiba Inu's highest value, which has been out of reach for more than 2.5 years, is certainly a positive development after a prolonged period of little growth and unpredictable changes. Nevertheless, it is crucial to approach such predictions with a certain level of prudence. Optimistic estimates can instill confidence and enthusiasm in investors, but it is important to regard them as possible results rather than certainties. The cryptocurrency market is widely known for its inherent volatility, and several factors such as market mood, regulatory changes, and broader economic trends can significantly impact price fluctuations. Furthermore, the outlook for Shiba Inu's performance after its recent event indicates a small but encouraging sign for investors who have maintained their unwavering faith in the token's future prospects. However, what is your perspective on the matter? Please leave a comment below. I am keen to peruse your viewpoint.